Welcome to OAG's latest webinar. Good afternoon, good morning, depending on wherever you are listening from, what part of the world you're in today. Today, we're going to talk about connectivity after the pandemic. That implies that the pandemic's over. It's not quite, but we've got to start out on an optimistic footing. So, what are we going to cover today? We will be taking our usual look at regionally, our sort of roundup on recovery, how is capacity looking against 2019 and recent months, and we'll be talking you through some regional changes that we're seeing there. We're also going to look at how changing airline schedules are affecting large hub airports, and we have a number of different layers to look at on that. We're going to look at regional connectivity and how that's changed across various parts of the world, and I'm sure we'll be bringing you some interesting insights there, or you can tell us if we have or not later on. That sort of begs the question in terms of regional connectivity, what the future is going to be for the smallest of airports, and I'm sure there'll be some interesting insights there. And in all of that, there's been a lot of media, negative media in particular in Europe and the UK of late on airline and airport congestion and disruption. So we're going to take a look at some cancellations data. We haven't done that for a while in these webinars. And talk you through what we think we're seeing there, and we've got some interesting snippets on some of the pinch points at Europe's biggest airports. So to get through all of that, I'm delighted to be joined by John Grant, as ever, OAG's Chief Analyst. Welcome, John.
Hi Deirdre, hello everyone, good to be with you. Time flies, doesn't seem like 3 weeks ago since we last did this.
Well, that's it. Yeah, it's we got the scheduling a bit mixed up with the last one. The most observant of you will also notice that we're camera on. We've only ever previously done that on our Christmas special. So are we feeling festive, benevolent? I don't know. Having said that, we're delighted to welcome back one of our speakers from our last Christmas special, João Pita. Welcome, João.
Hello, good to talk to you again. Delighted to be here.
Coming to us from Sao Paulo today, so we're delighted to have you on board. Thanks for agreeing to join us, and we really look forward to hearing what you've got to say about what's happening in your part of the world today.
Thank you.
Okay, so before we get started on that list of things that we said we were going to talk about, we have got a short poll that we would like to put to you, our audience. So appearing on your screen shortly will be a question really about where you think the recovery is coming from, and actually which size of airport is most affected or has been most affected by the impacts of the pandemic. So you'll see that on your screen now. We'll leave it open for just a minute or so and give as many of you as want to the chance to vote. We know that when we run these polls, you can't see anything else on the screen, so we'll take another minute or so. I can see that about 45% of you have voted. We'll fill for another minute or two and let some more of you have a say on that. And thanks everybody for engaging with the poll. Gosh, you're going quickly. We're up at 65%. Any last votes? And I can say that at the moment it's looking pretty close, but we're going to share the results later on when we get towards the end of the webinar. Okay, so we're at 75%. That seems to have sort of stabilised. If we close the poll now, that would be good. Okay, so thanks everybody for that. Just a little bit of insight from yourselves is always good. Okay, so we talked, I referenced that we were going to do this sort of regional roundup and cover some of the information that we normally do. The question, as ever, John, is how close are we to 2019 capacity? It looks from the image here that we're getting closer. You know, is this reality though?
I don't think so. I think you know, we've got to be mindful that that is planned future capacity. We're seeing events around the world that are leading to capacity being cut every week. So, you know, we track forward broadly 3 to 4 months, and so we're looking to the end of August at the moment. And the noticeable pattern at the moment is week on week capacity reductions in China are around 5 million seats. And those cuts only being made sometimes at less than 2 weeks before the planned data travel. So it means we're sitting at around 90.5 million, as you say here. At the peak of 2019, we got up to 119 million seats a week. So, you know, I think this will, if we're lucky, and I think it would be extremely optimistic to think China's going to come back by the end of the summer. You know, they've got 5 million more domestic seats they could add to the number, which would take us to 95, nearly 96 million. But I don't think we're going to break through the 100 million mark this summer. And I think we also need to recognise that, you know, capacity is the measure we have. For the airlines and the airports, of course, the most important measurement is demand. And some parts of the world, we really are seeing very, very strong demand. Other parts of the world are at different phases in the recovery and are just beginning to come out of lockdowns. Consumer confidence isn't as high, and it's going to take longer for them to sort of realise the sort of numbers we're seeing in North America and the United Kingdom and Europe at the moment. But it's a lot better than it was. Busiest day of the year looks like it's going to be the 12th of August.
Here?
And that, yeah, and if that is the case, you know, then that's slightly later than what it has been in previous years. But as I say, we're seeing airlines just adjust capacity. If you strip China out, the level of tinkering, the level of volatility is much lower than we've seen for most of the year. Probably on a weekly basis, we're seeing no more than 1 or 2% change by regions, excluding Northeast Asia. So it's a much more stable position. Some country markets are positive. Yeah, we're getting better, but we're not going to get to back to 2019 at the moment, I'm afraid.
Okay, let's break that down then. You talked about China, and we've got the regional picture here. Now we've moved now to looking at capacity by month. We've separated out China, so you can see that variation that you were talking about, John, in terms of the real peaks and troughs. And that feels like a very aspirational, you know, future look in the next 2 months, particularly for China. And we talked about that in the webinar this morning. For those of you who don't know, we tend to run 2 in a day. One that focuses on Asia Pacific, typically, and one that focuses on Europe, North America, Latin America, etc. But yeah, worth just saying a little about it, John, I think.
Yeah, so interesting. I mean, you know, China is completely aspirational. Flying a kite, more chance of Glasgow Rangers winning a football match tomorrow night than there's of China realising those numbers. So I think, you know, a long way to go. Most markets have got upward trends, and as I mentioned, a few countries in each region seem to be ahead of their 2019 levels. Mexico's a case in point. Colombia's another case. Vietnam and India. So that's all positive. But I think the other thing we need to reflect upon here is that through the whole pandemic, we saw more and more airlines adjusting capacity and adding back more domestic capacity, particularly in the case of China. Now, as the world reawakens, those airlines are probably going to have to scale back, or want to scale back, the levels and intensity of domestic flying and reallocate those aircraft to international routes. Some of those international markets will have longer turnarounds, which means that perhaps some of the productivity in terms of capacity we're seeing at the moment will begin to just fade away. It will just, a couple of percentage points here and there, slide away as we see the mix of domestic and international flying change. And of course, we need international flying. It's the most profitable part of most airlines' networks. It's where there's more corporate demand. So it's where we want to see things happening. I hope at some point, you know, that we see China come back into, or Northeast Asia become the second largest regional market in the world again, because it should be. It's China, Japan, and South Korea. And should overtake Western Europe, but you know, within those within that particular region is the world's problem, or the world's aviation problem at the moment. Japan is still in lockdown. China is still in lockdown. It's really, really frustrating to see those major markets closed and the impact they have on the rest of Southeast Asia in particular.
I think what's encouraging, certainly from your perspective, Joao, it looks like you're sitting in the right part of the world. There's been a real steady, slow, but you know, consistent recovery in Latin America. Obviously, a little bit of a dip there, which I think was probably the Omicron impact that was felt more steeply in other parts of the world. But this is a good story, isn't it? This is good news for your region.
And it's always great to listen to John, and yeah, I think there are many reasons why Latin is doing like that, and I firmly believe that if not in August, I think in September we should reach the 100%. And as we go to our summer, I think we'll see robust growth into the single digits or even double digits growth compared to 2019. We are less connected than other regions, so the international traffic that John pointed out, it's less relevant on the Latin than is in Western Europe, or at some extent even in Southeast Asia. So when we see Colombia now already up against 2019, so we see Brazil very close to 100%. So what we feel is that domestic is doing extremely well, and that is what 80, 85. Sometimes even more of the total traffic. So we are seeing a significant capacity be getting to the system year, week after week, and so we see that robustness coming into our winter and then spring and definitely summer. There are also some parts, and I think we should be quite looking carefully some of the questions like the fuel prices, and how the long haul will behave. And last but definitely not the least, the inter-regional. So how we can connect more Latin within Latin. And of course, if we do that, then we should be up in the 10 to 15% up on 2019. So I think, again, we are in a good situation. We see very robust numbers on the domestic side. Long haul is very focused on a couple of cities like São Paulo, Lima, Bogota, Santiago. So we are getting back there strongly from Europe, from the US. I think what we need to focus is how we can get back to the levels of inter-Latin that we saw in the past. So more services from Lima to Santiago, or Buenos Aires to Bogota, or even some mid-markets like Rio de Janeiro to other places. So I think that is the most important, so that we can sustain the growth with connectivity, which is the topic of our discussion today, and of course more than connectivity, with feeling. So I think that is I think an important point for the next couple of months.
Thank you for that, and I'm sure you know, we'll dig a bit more into that as we go. I think it's interesting when we go down a level, and you've talked about some of these countries already in terms of what's actually happening, but there's a real you can see a real variation here, looking across all of the Americas, in terms of what's happening. Now, some of that is of course driven by, you know, big domestic markets. Obviously, you've got Mexico, which has bucked the trend throughout, and to some extent, as has Colombia, in terms of you know, Mexico has just kept the doors open, hasn't it, throughout. But you've got obviously strength there in both domestic recovery and now growth, and also international capacity. Brazil to some extent as well. You know, level pegging, I guess, with the States in terms of where it is. But there are countries at the other end of the spectrum. Now, it's all relative, because we were looking this morning at countries in Southeast Asia which are down at operating only 20% of 2019 levels. So this is actually by global standards, a relatively good news story, but it's still quite a marked difference, isn't it, in terms of how recovery is actually taking place.
It's strange, Deirdre. I mean, if there's ever such a thing, it's a personal pandemic, isn't it? Every country has had its own event, managed it in different ways. Some perhaps did better than others, and some didn't even try, quite frankly, like Mexico, and have reaped the benefit in terms of volumes and demand. But a lot of that, certainly, you know, the red you see in Argentina and Peru is about just reopening now. It's about consumer confidence, and it's about the ability to travel. The one I find staggering is Canada, which, you know, for a fairly well developed, mature market, was slow to reopen, and is clearly picking up from May to April, but virtually closed all of its leisure markets in February, March and April, with Air Canada abandoning and Air Transat abandoning all services to the Caribbean. And, you know, that seems to me that they've struggled from an aeronautical perspective to handle the event. And of course, what we've seen in terms of consumer behavior is many people just literally driving across the border into the US. And catching a flight from a US airport to their ultimate destination. So yeah, it's fascinating. I mean, the Dominican Republic, of course, benefiting from a lot of European charter activity compared to other Caribbean islands, and you know, they made some pretty brave and bold moves that reaped rewards for them during COVID-19.
Yeah, I think trying to add something on what John said, I think we have some levels of analysis here. First is how the countries behave and what the level of restrictions were or are with the pandemic. So some were more open, always, like Mexico, Dominican Republic. Others were more closed, like Argentina or even Chile. And that of course drives the recovery. Then there is a second level, is how is the market? You know, how are the airlines behaving? How robust are they? Do they have the right fleet? Has there been any major change between 19 and 22 on the landscape of airlines that operate in some of the markets? So if we see, for instance, Argentina, in 19 we had LATAM Argentina operating domestic services. We don't have it anymore. So there might be some change there in terms of the reduction of capacity, just because there is one less airline in the system, in the ecosystem of Argentina. Of course, in Peru, there was a significant downscale of TACA Peru, Avianca, also in the Peruvian market. So there is also this level of how airlines are responding to the pandemic, how they have been supported by governments, if any support, and how can they deploy now capacity, the number of aircraft. So we see this very clearly in Brazil, where tariffs are very high, and we don't have, at least in the airport opinion and the passenger opinion, enough capacity to fulfill demand. That's why fares are so high. So, you know, there are different levels of recovery also, because the markets are different, the industries are different, and the consolidation and the market power of the airlines in different markets is also different. So for me, it's unbelievable what people are doing in Colombia, because not only there are many more flights from Colombia to the US and Mexico than there were pre-pandemic. So, you know, a lot of effort from the tourism of Colombia, a lot of effort from the airlines, putting capacity, not only from Bogota, but from Medellin, Cali, Cartagena, and other places to the US and Mexico. But also because there is Viva, there is Avianca, there is LATAM, so they are all competing, JetSmart, so, you know, at the end, there is more brands into the Colombian market. And so that stimulates demand, of course. You know, if you have more competition, you have more carriers, you are doing different things. And I think people now, they want to do point to point, you know, they want to try different markets. And so I think the best news here, not only for Colombia, but for the continent is if you have competition, if you have good carriers with enough fleet, then you will stimulate demand and you make people be comfortable getting into the plane again. And I think Colombia is definitely a market to look at.
And I think that's the secret, isn't it? That for so many people who haven't stepped on a plane in 2 years or traveled, actually that first journey is a hurdle to be overcome, isn't it? And that's, you know, we're going to come in a little while to talk about cancellations and congestion, because that has become the sort of, you know, the narrative in the press across parts of Europe at the minute, that, you know, traveling's not a pleasant experience at the minute because airports are congested and etc. And that doesn't help the anxiety potentially that people have about, you know, about travelling again and about getting that out the way and getting to their destination. You know, we'll talk about it later, but it's a short-term issue, isn't it? Because once people have got back into the habit again of traveling, and there's choice, and if fares are manageable, then you know, there's all to sort of to play for. I suppose that's a, you know, a really interesting subject though, isn't it? You talked about fares going up. We're seeing that across the board, aren't we, in Europe and North America as well. Transatlantic fares are exceptionally high at the minute.
Well, you've got a number of factors playing there, of course. You know, pent-up demand is really strong. You've got lots of people who've got vouchers who are using those at the moment that they've earned, in inverted commas, over the last couple of years. But at the other side of that, you've got the strength of the US dollar, which is absolutely great for anyone from the US heading to Europe. But you know, the euro and sterling have tanked by about 10% since the beginning of the year, so it's become a pretty expensive destination. I think the other thing is it is about confidence. I mean, and many markets in the world are suffering from what I describe as Ryanair syndrome. You know, when you fly Ryanair, you get off and you say never again. But you go back and you do it again, and it's exactly that point. You know, once people have done it, they will do it again and again and again. And to Yao's point, you need low fares and low cost airlines sometimes, and more capacity to accommodate that demand. Another moment where we're heading to a summer in Europe and across the Atlantic where capacity is going to be really tightly constrained. You know, and that inevitably is going to lead to higher airfares. And
actually, we've had a question about, you know, do we see the risk of inflation impacting on that recovery across North America and recovery?
If I can just go one step behind on this is you know, we also discovered new markets. And I think that linked with one of the topics that you mentioned about regional airports, smaller airports. You know, we have in some of these countries, very big countries, right? I'm from Portugal, a very small country, smaller than the state of São Paulo. And so, you know, these are huge countries. Argentina is the 8th or 9th largest country in the world, or 7th. You know, for Buenos Aires to Ushuaia in Patagonia is like 6 hours flying, so it's very far away. And again, I think people from Brazil or people from Colombia or even in the US, and I think we saw this in the US as well, they have discovered new places. And actually there are some smaller regions or more nature-driven cities that are closer to some regional airports that actually saw the demand growing. And now when we go back to more business as usual, corporate traffic returns, is how airlines will reshape their network back into the previous, let's say, framework of COVID, or will they just add those services and continue in those services because they were doing so well during the pandemic that they might become hotspots for the future. And for instance, Cartagena or San Andreas can be a hotspot for Colombia. They were already, but they might be for the entire region. Or maybe Cusco will become a more booming tourism destination, or Ushuaia. So when we see Aerolíneas Argentina starting Ushuaia from Sao Paulo, so this is kind of a big bet. So they are betting that Brazilians might be willing to go to Ushuaia and not that much to Paris, just because they might be less crowded. And so when we go out of the pandemic, you might have the money, but you might want to choose where to go, see different places. Then, okay, you get more confident and you go back to Milan or to Paris or to Lisbon. So, you know, I think how airlines will behave in this ecosystem, it's interesting. And when we see US and Brazil, I wouldn't be so worried about the 9% below, because, you know, there is corporate traffic that is still coming in. And so this 8, 9, 10% is, I would say, that the top of the pyramid that will get there when more corporate travel returns. But I think this for the airlines is important. Sorry, John.
It's not just destinations, is it? It's interesting. It's also about finding new markets. You know, business class is now being occupied increasingly by leisure travelers who have disposable income and, quite frankly, weren't prepared to pay the fares that were being charged 2.5, 3 years ago, or couldn't afford them. With some pent-up savings and a bit more disposable income, at least at the moment, we're seeing more leisure travel in the premium cabins, and I think that's an interesting dynamic to the airlines. You know, is that going to be the compensatory market for the loss of corporate revenue? It books earlier, you know, so you know it's there, and once it's booked, it's going to travel because a whole itinerary is planned around it. So it's really interesting to see how it's going to evolve as we come back out into the recovery.
Yeah, good point.
I think that,
okay.
Okay.
No, carry on. I'm conscious we need to move on, but one more point. I'm sure we have time for.
I think John mentioned perhaps one of the single most important points, which is who travels? Who is the traveler? And this is, we are in a global market, of course, right? Aviation is perhaps the most global market of all markets, but the dynamics are very different from mature, more wealthy markets like US, Canada, Australia, and Western Europe to less mature markets. So actually what we are seeing is that in Brazil, Argentina, and some extent in Colombia, definitely in Bolivia, is that you have wealthy people that typically travel abroad internationally, that they are doing domestic flights and actually increasing the fares on the domestic. Because for those leisure places, if they want to go direct, they might be paying the same on a domestic flight that they would be paying for an international one. And this is very interesting because it means that there is just a few percentage of the population that actually flies. And those guys during the pandemic, they didn't travel, they didn't dine out. So the savings for this population increased. And because it increased, is now helping the pent-up demand because people just saved a lot, significant amount of money, so they can expand traveling. They want to go out, besides that they have vouchers and so on. So I think this is a combination, and that's why we need to be careful on the pent-up demand, because pent-up demand is a combination of many things. Let's see what comes.
So there's a perception, isn't there, that pent-up demand, and we were talking about this on the webinar this morning in the context of Asia, that there's a sense that some of that pent-up demand, or a significant proportion of it, is VFR, you know, visiting friends and relatives who you haven't seen for 2 years or 3 years. But you're absolutely right. There's another segment of the market that has disposable income and desire to travel, and you know, almost has the seize the day mentality as well, because it has that demand for travel has been frustrated. So yeah, I think
you can only buy so many white goods and fit them in your house, you know, and ultimately, whoever you are, apart from my wife, you can only buy so many pairs of shoes and wear one pair at once, you know. So it's that sort of, what am I going to do with my cash? You know, if I leave it in the bank, I get a lousy interest rate, and the stock market's crashing, and I've got a bucket list of things I want to work my way through, and I might be locked down again in 2 years' time. Whoever knows? You know, lightning may strike. Let me go out and
make the most of it. Right, let's try and make our way through some of this slide deck. As fascinating as the conversation is, you know, understandably our focus today is much more on Latin America, because we've got an expert in the virtual room with us. But just headlines in terms of Europe, we're obviously seeing, you know, we've repeated this analysis for at country level for Europe. We're seeing a more consistent picture, I guess, perhaps with the exception of Germany, that's lagging a bit behind, but much closer to, you know, that just sitting below the line in terms of the global trend for capacity recovery, and really, there are different things again going on, aren't there? You know, you've got it's European summer season. You've got the strength of Ryanair and Wizz Air driving this recovery in a really bullish way, and you've just got different pace of countries coming out of COVID, haven't you? And releasing people back into being able to travel again.
And of course, in Germany, you know, there has always been a larger proportion of capacity into Eastern and Central Europe than those other countries you've listed there. So clearly that's been impacted in the last couple of months as well. But I think we also need to think about the context of where Europe was this time last year. You know, most markets were still only just beginning to open. We didn't have freedom of travel throughout the European Union. The United Kingdom was still locked down. People weren't booking holidays. They had no certainty about could they travel or not travel, and no one wanted to give an airline an opportunity to give out another voucher. So I think this is, you know, it reflects what will be quite a strong summer in Europe. And, you know, Michael O'Leary yesterday was saying he expects fares to be perhaps 7 or 8% higher in the coming months. And if he can do that, and this is, you know, the world's leading experts in low-cost travel, and he believes he can squeeze the yield another 7 or 8%. Well, one, it's a lot of revenue. Two, a lot of it will flow through to his bottom line, and he's in for a good summer, and many other airlines will follow.
Okay, talking of good summers.
No, I think these are, I totally agree. I think Germany is a different story because it's a lot driven by Eastern Europe and Central Europe. The UK at some extent, not that much, but also with Asia. So I think Asia impacts a little bit more the UK than it might impact other countries. And I think the countries that are more leisure driven, like Italy and Spain, they'll see stronger recoveries. But I think this also shows one thing when we compare to Latin is, if you have more airlines, more carriers, more competition, more people thinking where to put their planes, then you will stimulate demand, right? There is no such thing as demand. Demand is people willing to fly at a certain price. And so if I can escape 4 days for a decent price, I will do it. If the price is very high, I won't do it. So I think that the robustness of the market in Europe with 20, 30, 40 brands competing at some extent, it's a much more healthy environment than we see in other regions, and of course that drives demand.
Yeah, good point. Okay, turning now to something we mentioned earlier. As I said, this, you know, you only have to open up a browser at the moment to see a negative story about flight cancellations in Europe, or an airport struggling with responding to demand, and we'll come on to that in just a moment. But we thought it was worth just taking a look back at cancellation rates since the beginning of the year. typically pre-COVID, and those of you who've been around since the beginning with these webinars will remember that we've shown cancellations data before, although not for a while. But typically the average global cancellation rate is about 1%. Now we're obviously seeing, and we're covering a period here, certainly across Europe and North America, where there were distinct weather events that caused dynamic cancellations. I think we had snow in Turkey. We had a weather event here in North America. We've obviously had, known disruption in Europe with capacity, with demand building back up. And this was the kind of run up to the Easter holidays, where some of the big hubs in Europe were really having difficulties with a combination of getting staff back in to the workplace in the volumes that were needed to process the number of passengers that were there, but also with sickness levels, by COVID still impacting. But I think if we look just at the last month and how this has really started to settle back down again, this is not the scare story, really, is it, that the media are portraying?
No.
The elephant in the room here is China, which is known. This is just how capacity is being managed in China at the minute.
Yeah, I mean, just to clarify, the definition of a cancellation is within 48 hours of the planned scheduled service. So if it was taken out 10 days beforehand, it wouldn't be considered as a cancellation. But a lot of airlines, when they saw how resources were shaping up, the issues with getting cabin staff back, having to get security passes and getting everyone through all of the vetting processes, they'd already started to cut back and trim back capacity. So, they'd gone back and maybe shaved 3%, 4%, 5%. And British Airways are an example who said, we're going to shave our network until July, when we hope to have more people in and we can actually operate a full program. And the latest Omicron variant has passed through. So airlines have been pretty canny here. They've taken advantage of this in terms of making sure they can deliver what they promise and what they advertise they're going to deliver. But it also, by taking that capacity out, is another opportunity for them to squeeze the yield a bit higher in a market of pent-up demand. And that's absolutely fine in Europe, because as we know, it's 40 or 50 airlines competing. It's absolutely brilliant. In Latin America, where you've got 4 or 5 carriers and they've all behaved the same way, because you would expect them to in a free market, there is a need for more capacity to be added and someone to come in and stir the market up. Don't forget, in Europe, we're looking at some countries where there is 300% more capacity this month and this week than there was last year. And people who are in the industry went to find new jobs, change their lifestyles, and getting them to come back. How can you sell an attractive 3 o'clock start in the morning to go to work, operate an X-ray machine, and then after 2 hours go home again? It's not the most attractive proposition in some places.
And I think that's, if we that kind of takes us on really to just exploring in a little bit more detail this issue of scheduling through the day and when the peak period is. And when we look specifically at some of the regional airports in the UK, because this was really topical last week, actually that window between 6 and 7 in the morning is the peak hour. And particularly for Birmingham and Manchester that have had issues, you've got that pent up demand all trying to squeeze through the airport in that hour of the day, and then that just sets up the rest of the day to be problematic, doesn't it?
Yeah, and that departure time of 0600 has a check-in time of 0400. And security opening at 0430. So it really does put a strain on resources. And here is my opportunity to be a Simon Calder piece of travel advice. If you can, don't fly at 6 o'clock in the morning. You are setting yourself up for trouble. Fly around 11 o'clock, 12 o'clock, and there's a far
much better.
Far fewer flights being operated. And I would have previously said always get the first flight of the day, because then, given how hard aircraft are utilized, air traffic control issues in Europe, for example, at least you're going and you're not waiting for some flow control issue in Europe, and your aircraft might come back a couple of hours late. Typically, on-time performance is really good at the moment, if not early. So on that basis, second wave, third wave departures from Europe to continental Europe probably make a lot more sense. And there is probably more capacity still available in these 11 o'clock, 12 o'clock, 1 o'clock lunchtime hours than there is for the person who wants the last seat at 6 o'clock in the morning to Palma.
Well, you don't often get a prediction from John, but there you go. If you haven't booked your summer travel yet, then listen carefully to that. Okay, let's go.
This is a clearly airport operations topic as well, right? So this is something that we need to. There are many variables on this, and I know that there are some fellow colleagues on the slot area and airport operation area that are listening to us, and I think this is, the schedules are different because the strategy and the DNA of these airports are different, right? So in Amsterdam, for instance, the 10 o'clock is the departure, but there is also quite a lot of arrivals earlier on to connect. So if you have like an international hub like Amsterdam that connects east-west, so you need to arrive earlier and then connect. And so I think the behaviors are slightly different according to hubs or non-hubs. And of course, there is more concentration in smaller airports. There is typically, the smaller the industry is, the more concentrated it is, right? Because if there is a Christmas industry, it's 90% of their sales will be on Christmas. So if we have here just point-to-point airports, typically they feed the hubs and they feed their main destinations. So there is an early morning departure with the aircraft that stay on the ground for the night. They overnight there, they leave in the morning, they will arrive back and go back and forth 2 or 3 times a day. Hubs are different, and they are different according to where they are located. So for instance, in Guarulhos and in Sydney and in Bogota, the rush hour should be between 5 and 7 a.m. and we don't have curfews. So I think it will depend on where we are. But again, I think this is also important because the more you peak, the more pressure you do on the capacity of the airports, right? There is single industry that can operate only 1 hour or 2 hours of the day at limit, and then it will be empty for the remaining 20 hours of the day. So how to balance the peaks and valleys of the operation? How much should you put the airport capacity? And that in some of the countries is also linked with airport charges, how much airlines will pay, how much passengers will pay. Because if you are building terminals and runways just for 1 hour or 2 hours of peak, do you have the profitability, right? Can you have the break even for that investment or not? And this is even worse actually when you cancel, because the graphics that you showed is 48 hours before operation. So there are operational and tactical cancellations. But something that is happening is that because of slot alleviation measures due to the COVID, airlines are canceling some of their historics 5, 6, 8 weeks, then depend on the country. Each country has their own regulation prior to the operation. But what do we do, even in Europe, with the slot that is returned 8 weeks or 6 weeks before the operation? So are we not preventing competition by returning the slot so close to the operational day? Because there is no competitor that can actually fill the gap, even if demand is there. And so we are lowering the entire capacity of the system. And that, of course, depends on the markets. European Union has their own slot relief measures that is different from Australia and from Brazil and from the US. But again, I think what we are seeing is that people want to travel, period. They want to travel, they need flights, and they need seats. And anything that is preventing airlines willing to fly is something that ultimately is preventing passengers to fly, hotels to be filled, and employment to happen in somewhere in the world. So I think we should be very careful when we protect and when we do slot relief measures to carriers like in Heathrow or in Amsterdam, versus what we are seeing about pent-up demand, growing of demand, people willing to travel. So this is a fine balance between protecting the slots for the markets that are still closed, but also giving enough room and enough time for airlines that are willing to travel, to put their flights on sale, to sell tickets, and therefore to make demand happen.
I think that's the challenge, isn't it? That at what point, and because, you know, because recovery is happening at different paces in different parts of the world, there has to be a point at which slot protection measures are wound down, just as all the other things that were put in place to mitigate the effects of COVID are wound down. And we have to let the industry begin to operate as normal again, and begin to operate as a proper functioning market.
But, you know,
but that's really difficult when you've got an imbalance in that approach.
Yeah, one of the characteristics of the recovery I've noted, and I think shows the difference in business models, is how quickly low-cost carriers came back to the market and how quickly they stimulated demand. And there were legacy airlines, not to name any, who are based in Europe, who quite frankly didn't get their act together and were very slow to respond. And are now reaping the rewards of that slow response to the recovery. And they will argue, no, we were waiting for connecting traffic and it's very difficult when you've got a complex model. You're absolutely right. So if it's that complex, make it simple.
Right, thank you, John. On that subject, let's move on to our next slide. We're going back to your part of the world again, João. And on the subject of airline business models and networks, we couldn't have you on and not ask you about this. Obviously, the industry's been sort of engaged in speculating about Frontier, and is it Frontier and Spirit or JetBlue or JetBlue and Spirit? What does all of that look like? And then last week we heard Avianca and GOL announce their plans to collaborate. So we pulled the network maps because we thought it might be interesting just to see what that actually looks like visually, and what's the thinking, what's the play here. But it would be great to just hear your perspective, I think, on is this the beginning of, are we starting to see a shift in the industry in terms of a new wave of consolidation, but also what you think this means really for these markets in Latin America?
No, great. I mean, it's still quite soon, and so we are like in a football game, right? We are just seeing what's happening. And again, I think first of all, one previous point is that we have two languages that are, of course, spoken in South America and Latin, right? Is Portuguese and Spanish. And culturally, historically, the connection between the Portuguese part of South America and the Spanish part of South America is not it's not great, right? It's because, for instance, we have from São Paulo less direct connections in South America outside Brazil than we have to Europe, right? So we connect more cities in Europe, or the same amount of cities in Europe, than we connect to South America. So apart from Buenos Aires and Santiago, Bogota and Lima, and Montevideo, the 5 big cities, the other parts of the market, they are quite fragmented. And so this is how the market is. And so we need to build from here and build more connections. I think GOL is an absolute and 100% narrow body airline that does very well feeding their partners. So they are great partners for Air France, KLM. They are great partners for American Airlines. They are even great partners for airlines that do not code share with them or don't have that type of structure. And so they can feed 1/3, 40%, a significant part of the long haul operations can be fed by GOL. So they do that very, very well. So they can do the same for Avianca in terms of how to connect to São Paulo, to Rio, maybe to Salvador or Recife, and then connect the flights from Avianca to Colombia. And also to be a feeder from São Paulo, Bogota, and then Bogota to North America, or the same with Brasilia or with Rio de Janeiro. On the Avianca side, they are a larger airline, they have wide body fleet, but they have a minor presence in the lower South American part. And here, mentioning even Argentina, where both of them are very shy on the way that they target the market, and it is a big market. So very complementary networks. They can do hub to hub. Both can then start mid-sized markets to the other airline hubs. So we see Bogota to Salvador with GOL, and we might see Medellin or some other place to São Paulo. But again, more than that, I think they will do much better on frequent flyer programs, reducing overhead costs, administrative costs, more than to connect the network. At some extent, LATAM also didn't do it. The difference, I think, with LATAM and Avianca GOL is that LATAM has the wide body firepower to compete alone with Air France, KLM, and TAP and the others on the South American market.
Yeah.
While even with the Avianca wide body fleet, this is not enough for a true competition. Also because Bogota is very much in the north, so to connect Europe from Brazil is a significant backtrack. So it can do it to the US, it can be a competitor to the US. Let's see what GOL will do with American, because GOL American and GOL Avianca to North America are clearly competitors here. So we'll see how this will evolve in the future. But I see this clearly different than LATAM. So I think LATAM has a very strong wide body fleet capacity that can actually make a presence in Europe, make a presence in the US, and even in Australia and New Zealand. So I don't see that. I see more about optimizing networks, connecting to the hubs, and then more outside of the network, how they can reduce the overhead costs, have better deals with Boeing and Airbus, and then trying to have a leaner structure to have a true low-cost carrier. If Viva comes in, if Sky comes in, that might be a different story. But I think today with Brazil in the south, Colombia, Ecuador, and Peru in the north, we are still missing a big piece of this with Argentina and Chile outside. This might not be a pan-South American network as is LATAM, but still, there are many steps to future, and we need to be careful and to analyze it in the next couple of months.
Fantastic, thank you. Really insightful. Let's move on because time is really marching on. The last thing we really wanted to talk about was the impact on connectivity. And maybe we'll run on a little. If you have to leave at the end of the webinar, don't worry, because we record these and you will get access to the slides and the full recording later. But we might just run on a few minutes because I think there's some interesting things to be said here. What we did in this piece of analysis was we looked globally initially at every airport, and we allocated it into a tier based on capacity, departing seat capacity. We then looked at how many, and this was based on 2019 data. We then categorized those airports and looked at how many there were in 2019 and then in the last 12 months in each of those categories. So you can see a bit of a shift there. I think what's really interesting is if we look at these statistics here, so those tier 1 airports, so airports with over 25 million seats, have 35% of global capacity in 2019. but represent just 1% of the airports. And then at the opposite end of the spectrum, you know, those very small, under 500,000 annual seats, just 5% of seats, but a very long tail of number of very, very small airports. And we talked about that earlier in terms of the challenges of profitability in airports of that size. So some interesting kind of parameters, I guess, and headlines on the analysis we did. We then said, okay, let's look at capacity across those different tiers and look at which airports have been most affected. Now, those of you in our poll who said that I think 47% of people felt that large airports were most affected, so you were right. The other half of the audience pitched for small airports, but we probably should have had a middle ground there. Quite clearly, the impact on tier 1 large airports was greater, and that really is a function of their connectedness with all parts of the world, essentially. You know, these hub airports primarily lost the biggest proportion of capacity, down around 30%, below the global average of 22% down. Tier 2 airports were just bang on trend, and then you can see least affected, the very small long tail of tier 5 airports. Now, again, fairly fairly common sense in that much of the traffic at these airports will be domestic. Some of it will be protected in terms of its operating lifeline services, you know, or connecting remote communities within countries. But interesting, I think, just to see the stark difference.
Scary, isn't it? I think it's fascinating when you break it down by this and begin to dig in to see what are the drivers and why this is happening. Well, you know, tier 1 airports, many of them have quite high connectivity to other tier 1 airports. So you think of something like London Heathrow to JFK, that typically in 2019 there would have been what, 12, 13 flights a day with a combination of 747s and A380s and all sorts of aircraft. And they're not, that frequency has been reduced quite considerably. But I think the other thing is that many of those tier 1 airports had multiple daily frequencies to a destination. And in the recovery, many airlines are still serving those destinations, but not with the frequency that they previously did. So, you know, you're not seeing 10 or 12 or a shuttle type frequency in some markets, which rapidly impacts capacity. I think finally, the third factor is probably every one of those tier 1 airports did have connectivity to Japan and did have connectivity to China, and they don't have them at the moment.
Yeah, I mean, I absolutely agree. I think the question is, even if we continue to serve the markets, right, we'll serve them in a much smaller frequency. So let's get, I mean, we are tier 1, but we don't have Japan. We are just out of range. But, you know, we had like 5 Lisbons a day. We always kept Lisbon during the pandemic, even in the worst time, but like 3 a week, 5 a week, 7 a week. And then airlines, what they want is to serve from their hub all the markets that they previously served, right? Because that's how they can get connectivity. So they will not serve 7 daily, 10 daily, 15 daily. They will do 2, 3 daily, but they will, of course, connect the more markets that they actually can with the fleet that they have available. So I think that's you know, I think in the beginning of the pandemic was the other way around, right? So hubs kept working, but now as the industry evolved, I think it's normal that the frequencies from the hubs and to the hubs are lower, and of course the regional and the top 3, tier 3, tier 4 recover faster.
And that's really evident in Latin America, where actually as you've said, you know, there are fewer tier 1 airports anyway, but actually, you know, those regional services, you know, those regional airports connecting each other are by far the biggest share of.
And look at this. Can I just highlight two numbers? One is 1 to 5. We have more connectivity because to get to those tiny places, you need to go through the hub. And 5 to 4, we reduce the point to point, right? So we serve more tiny places from the hub instead of direct to sustain those services to that regions. And of course, we have not lost a lot of 1-to-1s and 1-to-2s just because we don't have a lot of high frequency, right? So we have less frequency than in the North Atlantic. So basically, if you keep the route, you will keep most likely the same frequency or close to that same frequency.
Yeah, it is fascinating, you know, and we'll see this change over time. We'll see more frequency added to the big hubs, tier 1s, and they'll grow. But I think it's also interesting how many airports were in tier 1 and have now fallen away, and that slide back down. That's, you know, every one of those wants to recover.
Yeah, and you know, we'll that's just a function of where we are in recovery, though, isn't it? You know, we'll see that come back.
I think we are. I know that we are 1 minute out of schedule, but I did with our team an analysis. So we ended 2021 with 25 million passengers and Amsterdam as well. So we had roughly 80 direct routes and Amsterdam more than 200. And we had 30 airlines, more or less, 30 something, and they had more than 100, I think 110. Same size last year, 3 times less airlines, 4 times less direct destinations. I think this sums up the difference between the European market and the Latin market. And so when we analyze one and we analyze the other, I think there are many things that are in common: aircraft, passengers, fares, but there are also many things that are quite different. And I think to see demand on one side and the other side, it requires different strategies as well for the airports.
Yeah.
Yeah, absolutely. We had, I think, one final slide, which was really just looking at these changes across the different countries in Latin America, and it's really just illustrating more of, you know, more of what we've been talking about in terms of the connectivity within Latin America, and obviously specifically in Brazil, you've got a really extensive domestic network that drives a lot of this regional connectivity, domestic connectivity within the country. That's really what we're seeing. Here.
Oh yeah, and airlines, especially Azul and Gol, they have started a significant number of routes outside their main hub. And so we see major growth from Gol in Salvador, and of course, to make it even more robust, the Viracopos hub for Azul. And I think when we see the corporate traffic, so the São Paulo, Rio de Janeiro, and São Paulo, Brasilia, and São Paulo, Porto Alegre, so they are quite down in terms of the numbers. So for those big cities that people were going back and forth 2-3 times a week, actually, they are not doing it. There are a lot of video conferences and meetings that are held virtually, and I think that is getting the demand down from the main centers as well. And then, of course, we have the tier 5s, the tier 4s that are new destinations, new markets. So in São Paulo, here in Guarulhos, we have more direct services for different cities in Brazil now than we had prior to the COVID. So we are linking more cities in Brazil than before. But of course, we have much less Rio than before.
Which is a sort of unexpected but positive consequence, isn't it? It's not something that you could have anticipated.
It is a very good consequence, and I think if we can build from here, so as soon as corporate traffic returns, not only in São Paulo, but in Bogotá and Santiago, but we can continue to have those services to those places that we didn't have before, I think this will have a stimulation effect, because people will continue to do their normal life during the weekdays, but they can go at different places during the weekends without doing a stop. And so we can have more dots on the system, and we can grow from there.
John, any final thoughts from you on this?
No, I think Yao's explained it very well. It's just, there is just so much opportunity in Latin America, but it is hampered in so many ways by the restricted number of airlines. And if there was a really pioneering Wizz Air or Ryanair equivalent in Latin America, just think of what those airlines have done in Europe. They've found and developed markets that didn't exist 4 or 5 years ago. How many of those could they find and develop in Latin America?
I can only say that we can welcome them. So
yeah, there's a lot to play for, isn't there? To use a very bad sporting analogy. That's the extent of my my sporting knowledge. Okay, for those of you who download the slides or listen on to the webinar later, there are a few more slides that cover the analysis for North America, so you're welcome to digest those at your leisure. And of course, if you have any questions on any of this, don't hesitate to get in touch with the team at OAG, and we'll do our best to help answer any thoughts or questions that come out of those. I feel like we probably should have scheduled 2 hours today, because I think there's so much to say that we could have just carried on with the conversation. Joao, it's been great to hear from you again. I think the lesson for us is we shouldn't leave it nearly as long until we talk to you again the next time, because I think there's lots going on in your part of the world, and lots to keep an eye on in terms of just how networks and the characteristics of markets are evolving as we come out of COVID. So thank you very much for joining us today, Joao, and an open invitation to come back whenever. John, thank you for your insights and thoughts as ever. For those of you who are regular listeners, we'll be back in a month's time on the 15th of June. So please don't hesitate to sign up. We hope you'll come back and listen to us again. If you are looking for any of the information that you've seen that we cover in our regular trackers, you can sign up on OAG's website to access that. There's also a blog that comes out every week with thoughts from the team on how the industry continues to recover, so look out for that as well. Lastly, thanks all for your patience, for letting us run over a little bit over time, and hopefully we'll see you along on the next webinar. Thank you, everybody.
Thank you. Bye-bye.
Thank you. Bye-bye.
Thanks. Goodbye.